Welcome to the Commercial Real Estate Show. Thanks for joining us. I'm Michael Bull, your host to the world of commercial real estate. Today we're going to talk about the self-storage industry. This industry has really been growing. It's been a sector that's been more acceptable to institutional quality investors, and a sector that's had some resilience. Well, today we'll look into the sector, see what's going on performance-wise, cap rates, investment-wise, and look into our crystal ball and see what we expect to see in the future. Please welcome my first guest. It's Ryan Severino, Chief Economist with REIS. Ryan, thanks for joining us today.
Hey, Michael, thanks for having me back on. Always a pleasure to be chatting with you.
Well, we appreciate it. And as we talked about on the show start here, we're going to talk about the self-storage industry and just where is property level performance. What do you see out there today in that sector?
Performance has actually been pretty good. Occupancy in the third quarter was down very slightly by about 40 basis points, around 88.7%. However, I would say it's important to put that into the broader context. Over the last year or so, we've seen pretty good performance. During the second quarter, we actually saw a 250 basis point increase in occupancy, as is wont to happen during the second quarter when the market tends to be strong. So to see a slight pullback in the immediate quarter after that is not that much of a surprise. And then, again, broader context, if you take a step back and you look at the performance on a year-over-year basis, third quarter last year to third quarter this year, occupancy is up about 140 basis points. So on the occupancy side, things are clearly trending in the right direction. On the rent side, I'd say we're also seeing pretty good data from the market. Non-climate controlled 10 by 10 unit went for about $120 per month in the third quarter. That's up about 0.5% or so for the quarter. So, annualized rate of about 2%, which is pretty good. It's up about 4%, believe it or not, on a year-over-year basis. So both of those fairly healthy indicators. For a climate-controlled unit, obviously rents are a little bit more expensive because you're paying for the benefit of climate control. For a 10 by 10 unit there, you're looking at about $153 per month. And then again, trend-wise, a little less than 0.5% up during the third quarter. But on a year-over-year basis, you're up about 4% there too. So I'd say pretty good run for self-storage, at least over the last year or so, if not longer than that. All of the major variables that we look at are clearly pointing in the right direction.
Okay. And it's seasonal a little bit then. Is that what you're saying on the occupancy throughout a calendar year?
Absolutely, because what tends to happen is that people tend to be a little bit more mobile during the second and third quarters of the year. Mm-hmm. The weather is better across a large swath of the country, so it's a little bit easier to move. Kids are out of school, so it's a little bit easier to to pick up sticks if your children are not in the middle of an academic year. And so all of that leads to higher turnover, if you will, among households, and that is one of the things that translates into pretty meaningful demand for self-storage. So we generally see an uptick in occupancy in the second and third quarters of every calendar year, and a slight downtick in the fourth and first quarter of the calendar years, when obviously you're dealing with more inclement weather across a huge part of the country, and you're dealing with kids in school, which makes it a little bit difficult to move.
Right. It's certainly an interesting sector for commercial real estate people to be thinking about, investors be involved in. And what about urban versus suburban? And it seems like we all see some of these self-storage places and they look, I don't know, they seem to look vacant or maybe they're not because you can't hardly tell. But what about urban versus suburban and performance?
I would say urban is currently outperforming suburban. And I'd say this intuitively makes sense. I think if you take a broader perspective on commercial real estate and you think about the recent outperformance of, say, the urban apartment market or the urban office market versus the suburban markets, clearly I would say there is a little bit of sort of urban favoritism that's going on right now, and that's true pretty much across the whole country. So whether you're talking about occupancies or rents, I'd say they both tend to be higher in some of the urban areas, and this is especially true in the really hot economies. Markets like San Francisco, San Jose, Oakland, those tech-oriented markets, especially the markets that are dealing with supply constraints, there's a lot of demand there. So I'd say the demand for self-storage in places like that is completely justified. Now, that's not to say that there's weakness in the suburbs, right? Overall, we're dealing with an occupancy rate of just shy of 89%. So I would say while the urban areas are probably a little bit stronger on average, it's not as if we're seeing pervasive weakness across the suburbs. It's just a little bit stronger in the urban areas than we're seeing in the suburbs right now.
Okay. And these occupancy rates, are these basically the Class A, nicer properties that you guys are tracking, or do you track a bit of the older, smaller ones as well?
We track everything. So that 89% is really an overall market metric composed of sort of, the really sort of newer, high amenity Class A properties, and then some of the older B and even C caliber properties.
So is it the same thing for performance, Class A just outperforming B, which is outperforming C?
Class A has been outperforming a bit, but believe it or not, we don't really see the same rift, or at least we don't see it to the same extent between classes for self-storage that we see for other property types. People often rent a self-storage unit out of simple convenience, and they don't really expect all that much from their unit, at least vis-a-vis some of the other property types, sort of A versus B, C. They're really just hoping for it to be fairly safe and clean. And this is especially true in very tight markets where people are really just looking for, honestly, they're just looking for the path of least resistance to the time to rent a unit. Moreover, what I would say is, and this is a very interesting phenomenon in the industry, the older a property is, the more resilient the tenancy is, irrespective of what class of property you're talking about. So that dynamic tends to trump class in a way that we really don't see with the other major property sectors. And this is, a couple things. Number one, it's because of the hassle of moving things that have been stored for a long time. It's hugely inconvenient. It's time-consuming. A lot of people would rather just not bother with things than have to deal with the hassle of up and moving them. They're often willing to just countenance a minor rent increase rather than have to deal with the hassle of moving things. But also because of the endowment effect. For those who haven't heard of the endowment effect basically says that people value an item that they already own, especially if it has some sort of sentimental value, to a greater extent than the cost of going out and replacing it in the market. So tenure tends to increase as a property gets older, and not surprisingly, some of those older properties don't boast the same amenities that we see in some of the newer Class A properties. So really interesting dynamic there in the self-storage sector that we don't really see in a lot of other property types, whereas buildings get a little bit older and a little more tired, and the owner isn't really spending on CapEx the way they should. That tends to show up in the occupancy level. We don't see that to the same extent from self-storage for some of those reasons that I mentioned.
Yeah, that's very interesting. And you talked about people not expecting that many amenities from their self-storage 10 by 10. In my 10 by 10 where I live on the weekends, I expect the place to be clean. I'm just kidding. I don't live out of mine. I do have a self-storage. And you talked about...
I hope it's clean.
It better be, right. What are some of the other factors, Ryan, that impact this sector?
What's really interesting about this, obviously some of the stuff that we talked about, but they're the stalwart things that you can obviously imagine, right? The health of the economy, the state of the U.S. housing market have a huge impact on the sector. But there are a few other factors, I think, that are interesting that people might not be aware of. The first thing that comes to mind is that college enrollment in the United States continues to reach record or near record high levels as demand for education increases across the board. And this creates demand for self-storage units, not just, in the summer months when occupancy spikes when the students aren't in school and they don't necessarily want to send all their stuff home, so easier just to put it in a unit relatively close by wherever they're studying, but also during the school year, because what happens is students tend to bring stuff back with them after the summer, and then they realize they don't have as much room for the stuff that they've been storing, and so they tend to sparingly take things in and out of their units, and so that tends to create somewhat stickier occupancy than one might think at first blush. Second, in any given year, a fairly significant percentage of the U.S. population moves. Now, typically this is somewhere around 20%, but the most recent figure for the U.S. was only about 12%, and that makes sense given the state of the overall economy over the last few years has limited employment opportunities for a lot of people, and so that's reduced transience of households in the economy. So as the economy continues to recover, I would certainly expect that percentage to kind of drift back upward toward historical mean levels, which should also release some pent-up demand for self-storage units. And then the one thing I would say, which is a little bit on the downside to be cognizant of, is that the winding down of very significant military engagements in foreign theaters, all else being equal, will tend to reduce demand. That's one of the things that we tend to see, is that the military tends to create demand for self-storage units as soldiers get deployed around the world. We've obviously seen, in the wake of 9/11, we've seen very significant levels of deployment over the last 12 to 13 years. Iraq has already been wound down. Afghanistan is in the process of winding down. So irrespective of what happens geopolitically, militarily around the world, odds are that we're going to see a shrinking of U.S. deployment around the world than where we've been over the last 10 to 12 years. And so I would expect the positive factors to outweigh the negative ones, but I just wanted to mention that because the military, depending upon what's going on, can constitute a fairly significant driver for the sector.
Yeah, that's very interesting. And what you mentioned too about the number of people moving, it does seem like that should be on a big increase, with the housing market doing better, the job market doing better, the economy doing better. So that might mean some sunny roads ahead for the self-storage market. We're going to take a short break here. We'll be right back with more from REIS, from Ryan Severino. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit Xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies, or for additional videos, podcasts, or articles, visit CREshow.com.